Beijing's protracted dismemberment of Jack Ma Inc. continues. Bridle on the horse hardly describes this orgy of value destruction. This horse has suffered multiple amputations, performed without finesse by the Chinese government. The Ma Empire is worth half what it was 9 months ago. The process is not over. Beijing is now doling out some of the most lucrative slices of Ma's business to new partners, of its choosing, including one of the most corrupt and financially shaky companies in all of China. 1 year ago, Ma was the richest man in China. He was the creator of Alibaba, China's largest tech company, and the Ant Group, the largest fintech company in the world. His corporate empire had reached private sector superpower status, on a par with the Western FANG-giants. Alibaba alone was worth more than any US company except for Apple, Amazon and Google. Ma was also a worldwide celebrity, the most famous living Chinese person. According to polls, he was more well-known outside China than Xi Jinping. Jack Ma was Jeff Bezos, Elon Musk and Bill Gates all rolled into one. He was the front man for the new China. The abrupt reversal of his fortunes has been shocking to watch. Ma's assets have been stripped, shorn, and degraded. Rectified is the English word often given as the translation for whatever verb in Chinese describes what Beijing is doing to his businesses. The last-minute quashing of the Ant Group's initial public offering was the opening shot, which I wrote about at some length last year. The offering would have set a world record. In fact, Alibaba's IPO in 2014 had been the largest ever at that time. Ant's was to have surpassed it by 40%. The size of the deal itself doesn't portray the scale of the financial phenomenon. The Ant IPO had become, by October 2020, a true frenzy. The share price on the private market ran up 50% ahead of the effective date, and the offering was said to have been 80 times oversubscribed. The Wall Street Journal called it a $3 trillion scramble. Ma was triumphant. It would be, he said. The WSJ reported that order book exceeded the value of all the stocks listed on the exchanges of Germany. Then, Beijing killed the deal. Following the IPO fiasco, regulators began to disassemble Ant. Its consumer financing business was set to be restructured, with new partners. The government also had its eye on one of Ant's most valuable assets, its data, derived from billions of consumer transactions it processes. The tech-intensive analytics generated from this resource have been the basis of Ant's competitive advantage over the less technologically sophisticated traditional banking sector in making consumer credit decisions. Beijing aimed to rectify that, too. Ant Group's money market fund was perhaps its most amazing and explosive success story.